Hello, hello, hello. Happy day after Tariff Day. How's everyone doing? Good morning, Patrick. Sterling putting in the information. Redbook year over year 5.7, prior 4.9. So that's still hanging in there. Good morning, Sterling. Good morning, Martinez. Thank you for putting in the news and the earnings, Sterling. Yeah, Intel, China's targeting Intel, Google, and Nvidia, and sort of going at trying to get some leverage over Trump. Gold keeps on marching higher. What else do we have? Good morning, Jacob. We have some key earnings from yesterday afternoon. Palantir was a beat, but geez, it's up like 25%. And I know they guided forward, but this thing's expensive as all get out. PayPal was a beat and down this morning. Spotify was a beat, so missing on EPS but beating on revenue. Clorox was a beat. PepsiCo was a missing on revenue. Pfizer beat. What else? Some of these other ones we don't have to go through. What else? That's good. Gotta say good morning, McRangers. Marathon Petroleum was a beat. Good morning, Royal Palms. Uh, hey, John, good morning. Good morning. Yeah, you all. Thank you for putting all that in again, Sterling. Hello, Charles. All right. We'll wait for some more people to come in. Lots of volatility going on. By the way, we had the ISM manufacturing back in expansion yesterday above 50. Keep an eye though, still moving forward. Manufacturing prices. Look at this big jump there. Again, this can lead to sticky inflation. Not saying inflation is going to ramp up to 5 or 6%. Again, I'm saying it. We could be very sticky in the upper twos over the next year, which last time I checked is well above 2. Today we already covered the Red Book. We got the JOLTS job openings and job quits at 10 a.m. Eastern. That's going to be the next big number. We got Bostic. We had talks yesterday when they were essentially talking about slow rolling any more cuts. So that was a brief takeaway, but we got Daly speaking, Bostic speaking, and then this evening Jefferson speaking. So we still got lots of Fed speak. This is a week of Fed speak. So far there you got Palantir. Oh, it's only up 23% now. We got Google, Meta running higher. Everything's trying to bounce back after yesterday. There's Pepsi after their earnings down 2.5%. Merck after their earnings down 8.48. KKR down 2.57. There's PayPal down 8.81. So a lot of stuff is getting sold after earnings except for Palantir. Groups, let's just do another quick refresh. We got comm services with a Google and Meta leading higher, consumer cyclical and technology. So definitely a rotation into that this morning. Out of consumer defensive and healthcare. So the fear is off, although we're still caught in a huge range. Fed Watch still has a pause until June, and then one cut only priced in this year. Only one cut. So back to that, just one cut this year based on Fed speak yesterday. Still in fear mode with the market. And PE ratio still 37.81. All right, we already covered all this. What's coming up after close though? We got Google and AMD and Snap and Chipotle. And so those are your big ones tonight. So we definitely got a couple that could be market moving in there. And then tomorrow morning, Uber, Walt Disney, Toyota, Boston Scientific. But this afternoon is going to be the biggie. So that's where we sit. Good morning, Anissa. Hello, Charles. Oh, I already said hello. You get in a second. Hello, Charles. Good morning, Heinrich. I just have to say, so some of these regulars, they get two hellos. All right. Overall, yes, we still do have the potential double top on the weekly basis in place. But I want to point something out. We're just above where we're trading mid-October. Just above. We're at the beginning of life. So we've got a whole lot of nowhere over the past couple months. Now it's going to be interesting right now to see if we start holding this higher low. Yesterday's low is going to be very key for me to keep an eye on, because we start dropping below there, I'll start looking to potentially for a front run of the potential weekly double top. However, that being said, we're trading at a very, very key support level right around now. Right yesterday, just above yesterday's close. So we've already, with the gap up, we've already filled the close, and we've filled all the gaps over the last couple days. So is there any strong pattern to look for? What I'm going to be watching is this overnight low to hold, this overnight low. And if that holds, then I'm going to watch for potential rotation back up to the gap open yesterday. So we had the 6 p.m. Eastern. I'm still going off futures time, which is central, but 6 p.m. Eastern gap reversal open that filled, and then we pulled back. So that's going to be still a key target. And then above there, it's into a clear path move. And then I'd watch for the return to the area of the 87.5 harmonic. Somewhere between about 1/3, and this is not just for today, this is for the remainder of the week. That's going to be our overall target if we take out yesterday's gap open in the future, in the futures, not in the future. Other than that, we have, and I just wanted to point this out too, because I'm keeping an eye on this. This did qualify for a little mini double bottom that was triggered on the 1 hour basis. Okay, so that's also why I'm watching for at least a potential snapback pattern here. If you go even with the aggressive, you see it's well within this clear path move. So that's where I'm looking. And again, if you're using the aggressive targets, it'd be about 60-40, 60-50, and 60-59. And then the next key thing, as I said before, is yesterday's gap open. This is the gap open I'm talking about from these bars. All right, what's the invalidation point for this? And this will be, I'll sit up and take notice too, is if we close back below 6,000 or we trade back below about 59.96, that pattern will be busted. And then I'll be watching for the low bar from the overnight session. If that gets taken out, my key targets are 59.83 and then 59.63. So that's exactly what I'm looking at this morning. What else? No, that's good. 20,000 federal workers have taken Trump's buyout to resign. Well, we can always shrink the government. That's a good thing. NASDAQ. Same thing here. I'm going to be watching yesterday's gap open reversal. We filled the yesterday's close to the gap open already. So that's going to be key. But the roadmap in the the roadmap in the NASDAQ's not as clean. If we start taking out yesterday's high, I'm focusing on the key close from Friday the 31st of 21,589. Then, if we take out that, I'm focusing on 21,776 area and then roughly the descending channel line. So that's not as clean in the NASDAQ. Okay, did we have a little mini double bottom in the NASDAQ? Which is a no. If I can draw the line, see, we caught between the 50 and the 62.5. So that means I can't use double bottom targets and I get to more aggressively trail, but we are into a clear path move. So if we start taking out this 21,461 area in the open and hold it as support, then I'll watch for the targets being, we have a clear path move with the final target. The target area would be around yesterday's close, 21,560 to the gap open, 21,592. So those would be the two targets I'd be looking at if we start running and hold above 21,460. Those are what I'm watching. Okay? At this point, if the key level for me on a closing basis is 21,338, we start closing below that, I'll start watching for a potential retest of yesterday's lows. If that does break, the support levels I'll be looking at are 21,175. A minor support level to the spike low yesterday at 21,113 area, and then the major support level is down at 21,000. So those are all your up and downside levels that I am looking at least. Trying to go through more so how I pick my levels to help people to learn, and they can look at those and see how they compare to their own levels. Again, we aren't into potential double top territory yet in the Dow. I am watching for that on the little short term. That's on the daily basis. So again, if we run up today with the Dow, the very key resistance there is about 44,800. Beyond that, it's 45,200. Those are the two key levels. The upside, the major level to the downside happens to be 44K. Russell, lots of volatility in this one too. Still, very major resistance is 2296. Very key support is about 2248 to 2250. The VIX. Still, yesterday we had the pullback in the VIX. Again, first you had the announcement that Mexico was the postponement of the tariffs with that for a month, and then the postponement of the tariffs with Canada for a month. So that's what triggered the big reversals. Now, I want everybody to remember this. I think moving forward, one of my key things we're going to get announcements. We're going to get things put on. We're going to get things taken off. We're going to get Trump gone wild. So one of the key things I'll be looking at for any positions are when volatility is cheap, I'm looking to go long volatility. Period. And as Sterling brought up, for me, Sterling asked about selling volatility. It's got to be, I'm not risking selling volatility like yesterday, a lot of volatility around 20. I need major spikes, like the spike in December, the spikes in August. Those are the kind of volatility events that I'll be looking to sell. Until then, I want to be owning volatility, at least in the longer term. Okay, I'm not talking about 0-day options. I'm talking about longer term volatility. The DAX, so you might want to look at that. Again, I can't give you specific trading advice, but that's something I will be watching. The DAX on a rally, I'm going to still be watching for a potential gap fill back to 21,816 and to take this into potential double top territory. If we take out this low, though, that's going to be key in the DAX. If we take out the low from yesterday without double top territory, we're going to advance clear path move with a potential target all the way down to 20,500 area. If we do take it into double top territory, I will use the double top targets. The notes, not much to talk about. Again, we had the inverse head and shoulders, which really hasn't gained a lot of traction and stalling out. So we could almost turn this into a flat neckline one, but we're just going to let this play out and see how that plays out with the yield. Again, the thing for me is it had to get below the 50. We spiked below there yesterday, but did not follow through with the close. I'm still watching for a yield to turn up or at least stabilize in this range. And I'm actually going to adjust this one, if I can, to this key area right here. So that, I need a follow through close now below there. Let me take this off in order for me to really start watching for a yield pullback. I need to get below that area, and then I'd start watching for the return to the 200. Other than that, I'm watching for consolidation unless we start taking out 4.6 in the short term. Mike, what do you buy to trade vol? You could do a lot of different things. Again, you can do anything related to the VIX, to the VVIX. You can just, if you're trading options, if you're looking to establish positions. Okay, I'm just watch because we have volatility suddenly coming in. So even things like, because again, I'm bearish on Apple, especially after Friday's bar. I didn't call that out yesterday. We had too much going on, but especially after Friday's bar, look at that key reversal bar. So I'm watching for more downside in Apple over the next few months. So I would not be trying to capture downside by selling credit spreads unless we were super expensive. I'd be looking, especially when Apple vol goes cheap, to put on things that are on long volatility to the downside, or at least long volatility and capture stuff in consolidation. Same with stuff like Tesla. I'm watching for the breakdown, so I'm not going to be looking. I would not be looking to do this with credit spreads and selling vol unless we had a major spike in volatility. I'd be looking to, on any breakdown plays in Tesla, would be looking to own the volatility. It doesn't matter if you're trying to trade the whole market. If you're trying to trade the whole market, there's many things you can do to go long volatility. And it's all related to the VIX, the VVIX, any instruments. There's ETFs that you can use even. Dollar index, we still have the potential double top in place. So that's what I'm keeping an eye on. But especially I'll be keeping an eye on there. I'm more watching for the dollar to go into consolidation unless it does close below last week's low. Right now, there's no good short-term patterns. Crude. We talked about that little mini double, hit the first and second targets yesterday, but that was nearly impossible to trade. And now we're taking out the low. So I'm going to be watching in the short term for consolidation between 68.30 and about 70.50. We had the upper end of this trading range before, which lasted from mid-October to mid-December, and it's also between the 50 and the 62% harmonic. That's where I'm watching now for a continued pullback. Again, there's nothing to look at from the long side yet. From the short side, those are my key target areas. Natty gas, little bounce yesterday, but still rolling over, still watching for us to reconnect with roughly the 280 area based off the double top targets. Gold, still trying to edge up. Gold making new highs yesterday, no new highs today yet. But remember, still key levels 28.83, then 29.15 to the upside. Not yet much going on in silver. I'm still watching this thing. Still has to close above 33.11. The yen, this has turned. We don't have the double bottom. You can see here it's got way too sloppy. And if you look at the 4 hour, it's now a triple bottom. So it's turned into a horizontal channel. I'm still watching for if it's got to get some traction, close up. But the key thing is it's got to still close above 156.60 to the upside. Other than that, I'm still watching for consolidation here. Euro, unless we triggered a major double bottom, watching for rollover plays in that. The spiders, again, confirming the double top, but definitely not triggering it. Still, in order to trigger that, needs a close below 594.64. Right now, we're trading 597.47. Yesterday's close is 597.77. So we're trading 597.51. Sorry. Yesterday's close 597.77. So on any bullish move, that's the first target. And there's still a gap fill. So personally, I'd be using yesterday's high first, 629, and then I'd be looking for the gap fill to 601.82 on the bullish plays that I already outlined with the futures. If we roll over, the very key levels is 594.64 to me. And then if we sustain below that, it's yesterday's open, 592.67. The Qs, yesterday's close, 518.11. Looking to open 518.48. So any rollover play, any weakness in the open, I'll look for the 518.11 to hold. On any bounce play, again, I like the spiders better than the Qs, but on any key bounce play to cues. We still have the gap left behind to yesterday, 522.29. And then I'd be looking on a continued rally this week, 526.92, which is yesterday's open. And there's no other key pattern. If we roll over, yesterday's open is going to be very, very key from my perspective, 513.47. Yeah, you can use at the money straddles. Just again, you got to make sure volatility gets to cheap. Copper, I skipped over copper. Copper is still caught in consolidation, maybe making a move. It has to sustain something above 433, but then the targets to me would be 443. It has to sustain right above this level, but that's not a great setup yet. There's not a great setup for me in copper just yet because there's not a lot of great reward to risk. There might be a little breakout play, but you got to be really nimble. And it's got to be, it's really tight to 1-to-1 from my perspective. Bitcoin, nice reversal yesterday. You still have the massive weekly double top still in play, but keep an eye, we're still in that rotation zone. So technically on the weekly basis, still watching for things to hold. Now, if we start breaking back below 97.6, I will sit up and take notice to the downside. We already looked at Tesla briefly, trying to break down from the channel line and back below the 50, gapping up a bit today. There's still a gap left behind back to 404.60, but I'm really starting to watch for breakdown plays in Tesla too. This is looking very, very tired. But there's not a fantastic setup yet. That being said, NVIDIA, in order to invalidate the double bottom or the potential double bottom, we had to trade below 113.07, which we traded down to 113.01 yesterday. So the lower harmonic, and we closed back up, but there's no real thing there. The only play that I see in here is if we have the Nasdaq starting to run. Again, I'm going to be watching for more rollover plays in NVIDIA also, but the only short-term thing would be to the gap fill to Friday's close. That is it right there. So let's see. What do I think of Google before earnings? Again, I have to err still on the side of we're trading right against this harmonic you see here. Right against this key harmonic area. And let me raise these up. Hold on. I forgot to re-anchor it there. So why is that the key anchor? Because that's the last major weekly top. And we're trading right against there now. So in the short term, let me raise these to yesterday, to the potential pausing bar. So I'd have to err on the side of key support being at 190 and it's still going up. It is very overbought, but on any pullback, it's still in the weekly rotation zone. Unless this starts losing the weekly rotation zone. So key for me on earnings on any gap down is about the 183 level. Other than that, on any bullish play, you have 212.75 area as the first minor target, and then your major cluster is 218.85. So Palantir, since we had earnings yesterday, and this is off last week's, we were going into setting up a pausing bar. I re-anchored it just to see where those targets would take us, and yesterday we had the pausing bar right before the earnings. So that gave me 105. The new target is 105 on Palantir in the short term, based off the harmonics. And then I'm going to be watching for at least a partial pullback, possibly to 95. Sterling says Clorox has a potential daily weekly double top in place. It's gapping down the trigger area. The target areas are a clear path. Let's take a look at that. That's old. you do have your weekly double top in there. You are into a clear path move, and the technical end of the clear path move is right here. So just in front of the conservative targets. So that's definitely, that is something that can be playable again to the downside, especially if you lose this 200 week. Now remember, this is one that I personally, because of the position of the 200 on the daily, would be a little more aggressive moving a stop down. Because it's actually at the 25% harmonic. Now normally I move a stop at the 50% harmonic projection, 148.38, but given the 200 is here, and you see here we gapped above the 200 here and held it. So that would be the first area to move a stop. The next area I'd move the stop, just showing you stuff that I'm spotting on this chart. You see how this key prior resistance ledge could turn into some support, and that's right in front of the first target. So I'd be looking at more closer to 148.70. Looks like we're going to gap down, test that 200 right now. But that would be the next area I'd move down a stop right in front of that 148.38 area. And look at how this final target is. I showed you that where that 142.90 area came from. And look at this final target. That's the gap up play that held as support. You see this right here? So we have some very key targets. Now for this one, again, because reward to risk might be off right now, this is something even on any rally over the next few days, any snapback rally, I'd be watching for rollover plays to get proper reward to risk. Will gold make a correction anytime soon? Gold already made the correction. So you got to tune into this channel on a regular basis. I was talking about the mid to end of January for the breakout in gold for, boy, since we got the correction. You can see here the correction. This was the correction. So will gold get little pullbacks? Yeah. Is it going to get a kind of drop like we had? Not unless we have a critical market meltdown. Then you'll see some liquidation in gold. Other than that, I'd be watching, again, I can't give you specific trading advice, but what I'd be watching are for pullbacks in the short term into the rotation zone. We had a brief pullback in the short term into the rotation zone, which is between the 8 and the 21 EMA yesterday. We had one back at the Monday the 27th. So if I was looking for short-term pullbacks, it would be in the rotation zone. Long-term pullbacks, we don't have any significant topping pattern yet. And it's breaking out to new highs. All right. Let's just see. It looks like a pretty flat opening so far. Not much to talk about. Let's just take a look at the tick, the 5-minute tick. Very flat opening. Very, very flat opening. So for me, based off this, I'm going to be watching about, based off the opening area, the two key things I'm going to be looking for based off a flat opening tick. I'm bracketing this and looking for 60.18 area as key support, key resistance 60.26. So for a breakdown play, we have to break below this and confirm that we've moved actually below 60.18. For a breakout play, I need 60.26.50 to hold and then really take out 60.30. That's just short term because we have a flat opening. And remember we have, do not ignore the JOLTS numbers at 10. They actually could, in this kind of market with this kind of flat opening, they can actually move things. So 10 a.m. in roughly 27 minutes is going to be key for me to watch based off of breakout or breakdown with the futures. All right. You're welcome. Thank you for tuning AAFWNET. I don't know how to pronounce that, but thank you for tuning in. I thank everybody, and I see a lot of people in the background who don't jump in the chat. If you're here and you're new, again, I really appreciate you tuning in, and don't be afraid to chime in the chat. Even with what you think, you don't have to agree with me. I've just been doing this since 1992. All right. But that doesn't mean I'm always right. That's why you always trade and manage your reward to risk and manage your probabilities. Because it's not about being always right. It's about managing risk first, and the rewards will come. With that, you're welcome, Anissa. With that, I will see everyone tomorrow. Have a wonderful and fantastic trading day. Also, remember, there is more Fed speak today. So just keep on top of that. And in case Trump says something else. But that holds true for the next probably 4 years, or 3 years and 11 months. So we have to be on our game. Talk to everyone later. Bye for now.